Time Warner is a cable TV and cinema company, and it's in merger talks with AT&T.
Right, AT&T of course is a phone company, but this is where this convergence starts to happen. Time Warner formed from the combination of Time Inc., which was the printing and publishing house of Time magazine and all of that, and Warner Brothers, which is all the movies. But it's also got a big cable business, so that's where they actually install cable lines to your house, similar to Comcast.
Market cap $74 billion, PE ratio of 17.2, dividend yield here of 1.7%. Just because we're trying to follow a formula, let's look, and there again, the Trump effect. Good to see he's having a positive
sort of
impact on something.
The buyout premium, sort of as this deal comes to fore. But look, the Time Warner combination with AT&T was rumoured before the election, but of course now the view is that he's going to be more favourable towards, but maybe he won't. I mean, he's made some mixed comments.
Well,
about
one thing we do know is that he's relatively volatile.
Just a bit, eh? If I'm not mistaken, though, Paul Turner's in there, isn't it?
Yes, so CNN is inside of this thing, and
which
he
is
hates
not
them.
exactly Donald Trump's favourite.
Trump regards CNN as fake news central.
Yeah. So
which is really unfair.
And look,
Ted Turner, is he still married to Jane Fonda? That's all I want to know.
Ted Turner sold this business into Time Warner and has since disappeared off the ranch, but I'm not sure.
If he's still married to Jane Fonda. Remember Jane Fonda?
Yes, the exercise
I
lady.
thought that they were married.
Anyway,
so. Just bringing some trivia into the conversation, moving off the fake news element. I don't want to go there. Dangerous territory.
Yeah, look, this deal with AT&T, $80 billion deal, if it goes through, again, coming back to your point, this whole bit about convergence, I think could be very good. But let's not forget that these guys indulged 15 odd years ago in the worst corporate deal in media history.
Indeed.
With AOL.
So AOL,
not me saying that,
merger.
it's a former CEO of the company saying that. So
$164 billion deal to merge those two companies, and it was a disaster almost from day one, right in the middle of the dot-com meltdown.
Like a giant capital misallocation decision.
Yeah. But remember, Warner Brothers has got the Batman series of movies. They own the Harry Potter movies, all of them. They own the Lord of the Rings series, all of them too, and some other spectacular assets that have rolled on and now have multiple kind of iterations.
So hopefully you're saying that these assets can keep the fire burning for Time Warner.
And the studios that work, out in Los Angeles on making new media properties will continue to do these things. And that's in addition to the CNN Cartoon Network. They own HBO, which is Sopranos, Sex and the City, all these series that they're working on and new ones. There's some formidable royalties that flow from this.
Depth and breadth in terms of media assets.
Oh, yeah.
Is there a but?
Yeah, look, they're busy fighting off a lawsuit coming with Comcast again for ripping off cable customers. So, look, it's a reputational thing more than anything else. But again, I think, like with Comcast, it's in an up, and it's difficult to
bet against
go against it. Yeah.
I think
are you actually going to go ahead and say hot?
I'm going to say hot on this one.
Good.
Yeah.
I'm not quite sure what to make of the merger, because remember what the merger will do, it'll be able to then combine Time Warner's cable business with AT&T's internet Fios and other business, which is fiber optic systems. So then customers across America where they've got duplication in terms of physical infrastructure, they can save money. Then they can pipe the content that I'm referring to here, like HBO, and sell that into these extra households.
I think we're talking about a trend that we're going to start seeing happening in all regions across the world. So you'll see your telecommunications companies merging with your media companies, because distribution is the key.
Distribution is half of the coin and content is the other, and it makes sense to control both. And if the environment for big ticket mergers is more favorable and there's less concerns around competition and all that sort of stuff, then I suppose there are value and savings to be extracted.
Chris has already given it a hot. Are you going to...
I'm going to give it a hot yes, but I am a little bit worried that, somewhere in the mix of all of this, Trump is going to change course, because he blows hot and cold. On one hand, he talks about all sorts of populist agendas, and then he talks about being pro-business. I think he's drifting.
So Trump is really having an impact on your investment decisions.
Yeah, but I think we'll go hot on this one anyway, because it looks like it's in play and it's got certain advantages.
And I wouldn't underestimate the merger if it all goes according to plan.
Yep.